Hey everyone! From the absolute brink of financial ruin to a mind-blowing $48 billion triumph. That is the narrative Michael Saylor wants the world to believe right now. He is publicly celebrating what looks like one of the greatest corporate turnarounds in modern history, boasting that MicroStrategy's Bitcoin and cash reserves now dwarf its total debt by a staggering $48 billion. But behind the celebratory tweets and the massive green candles, a silent crisis is brewing in the background. A crisis that most casual crypto investors are completely blind to. While Saylor beats his chest over his massive Bitcoin treasury, his company's newest, highly controversial funding mechanism, the STRC preferred stock, is flashing a massive red warning sign. It is trading significantly below its crucial $100 target floor. So today, we have to ask the terrifying question that Wall Street is whispering. Is Michael Saylor's infinite Bitcoin buying machine finally breaking down? And can MicroStrategy actually survive the hidden pressures of 2026? Truly understand how high the stakes are right now? We have to travel back in time to October 2022. Picture this. MicroStrategy back then, trading under the famous ticker MSTR, held a massive stash of about 130,000 Bitcoins. It was a bold strategy, but then disaster struck. Just weeks later, the massive FTX crypto empire collapsed into dust. Panic gripped the market, and Bitcoin plummeted ruthlessly below $16,000. In that exact moment, Saylor's grand plan looked like a fatal mistake. For a terrifying window of time, MicroStrategy's corporate debt actually exceeded its entire Bitcoin and cash holdings by roughly $300 million. If you adjust for the company's 10-for-1 stock split in 2024, their shares were trading at a pathetic, miserable $13. The mainstream media was writing their obituary. Critics were laughing. They said Saylor had ruined his company. But instead of folding, Saylor doubled down with radical, uncompromising conviction. Since those dark days, the company has raised an unbelievable, eye-watering $60 billion, aggressively accumulating a hoard of about 843,700 Bitcoins. No other public company on planet Earth even comes close. Saylor claims this spectacular rebound is definitive proof that ultimate conviction always pays off. But this brings us straight into the present-day trap. To keep buying billions in Bitcoin, Saylor had to get creative, and that's where STRC comes in. Formerly known as the Variable Rate Series, a perpetual stretch preferred stock, this asset was explicitly designed to be a stable financial bedrock, built to trade consistently right around the $100 mark. To defend that critical $100 level, MicroStrategy resets the dividend payout every single month. If investors start losing interest, the company raises the yield to lure them back. They have hiked this rate repeatedly, pushing it to a massive 11.5% dividend yield. But here is the catch, and you need to listen to this very carefully. According to MicroStrategy's very own official SEC filings, STRC is not collateralized by their Bitcoin. If everything goes to zero, STRC holders do not get the Bitcoin. It only carries a preferred claim on residual assets. In plain English, this is a credit product. It is a debt instrument. It is absolutely not a direct proxy for Bitcoin. And lately, the market has realized this. The stock has refused to cooperate. Instead of holding strong at $100, it recently plummeted into the high 80s. Why does a drop into the 80s matter so much if Bitcoin is sitting around $63,700? Because of how the machine is engineered. When the crypto market experiences leverage unwinds, and MicroStrategy pauses its share issuance, a brutal slide occurs. Crucially, MicroStrategy is only allowed to sell new STRC shares at or above par value, meaning $100 or more. The moment the stock trades at a deep discount in the 80s, the infinite Bitcoin buying machine completely stalls out. Saylor loses his leverage. Now, prominent crypto analysts like James Van Straten are urging calm. They argue that the market panic completely misinterprets what STRC actually is. Data shows that everyday retail investors hold the vast majority of this stock, roughly 80% of it. Van Straten explicitly noted that STRC is not a stablecoin, meaning it doesn't depeg like a cryptocurrency. Instead, he points the finger directly at Michael Saylor's marketing, stating that you simply cannot promise 1 penny of volatility when the underlying asset moves with massive 40 to 50% volatility. and the holders are mostly emotional retail investors. Let's be honest, these fears of MicroStrategy collapsing aren't entirely new. Back during that brutal 2022 crash, the company actually made its first ever Bitcoin sale, dumping 704 BTC just to secure a corporate tax benefit before buying it back days later. History repeated itself this very year, with the company quietly selling another 32 Bitcoins just to generate the cash needed to cover their massive dividend obligations. This has led vocal critics, including famed economist Peter Schiff, to loudly brand the entire corporate structure as a dangerous house of cards. When Bitcoin, the core MSTR stock, and the STRC preferred shares all start falling in unison, the critics warn that a systemic liquidation loop could be triggered. The ultimate test of survival is happening right now. Shareholders have just approved a major structural shift, moving to a semi-monthly STRC dividend payout system, taking full effect at the very end of June. Will this frequent payout stabilize the stock and revive Saylor's buying machine? Or will the weight of these massive dividend commitments crush them in 2026? This is not financial advice.